This is Better System Trader, episode 16.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Welcome to the Better System Trader podcast. This is episode 16 and I'm your host, Andrew Swanscott. This week's guest has won a string of trading competitions. Listen to this record. In 2005, he won the Top Trader Cup in the Futures Division with over 60% performance in 3 months. That year, he also won the monthly race of the T-Cup organisation with over 50% in 1 month. In 2008, he won the World Cup Trading Championships with a return of 672%. In 2009, he won the World Cup Trading Championships again with a return of 115%, and then in 2010 he did it all again, winning with a return of 240%. He's the only trader to ever win the World Cup Trading Championships 3 years in a row, which is a pretty amazing feat. Oh, and then in 2012 he also took out first place in the Q4 contest. In this week's episode, we discuss a bunch of trading topics, including the strategies and position sizing used to win the World Cup Trading Championship, the role of indicators in strategy development, controlling risk when running multiple strategies, the importance of matching strategy style to market behavior, the principles used to develop profitable strategies without over-optimizing, when to optimize or tweak a strategy, and some discussions on the Forex and futures markets too. Our guest this week is trading champion Andrea Unger. I hope you enjoy it. Hi Andrea, thanks for joining us today. I'm sure everybody's aware of your background through the World Cup Trading Championships, but for those who aren't, could you just give us a little bit of information on your background and how you got started in trading?
Hi Andrew, and first of all, thanks for inviting me here. I'm very pleased to be here. Well, yes, if I'm here, it's because I'm a trader, and you found my name out there because I've been winning the World Cup Championship sometimes. So I've been trading for about 15 years now. Well, I started in 2001. That depends when people listen to this interview. And let's say my path went naturally through to becoming a system trader. I have a mathematical background. I'm a mechanical engineer, and everything which analyzes and tries to put order in the randomness is something that thrills me. So I started developing trading systems, and that is what I do today, and I do trade them. I also use the trading systems, the World Cup Trading Championships. Why did I take part of that? Trading is boring. Let's tell the truth. It's very boring, especially when you do it with systems, because you sit there and the systems go on their own. So I also wanted to do something which was a sort of a challenge, and I wanted to measure my skills compared to other traders out there. Obviously, the World Cup Trading Championships was the right field to do that. People from all over the world participate in there. And I also used trading systems in that championships. That is a long story if you want to go into the details, but I've won 4 times. I have not used all the same systems for over those 4 years because market changes, the market conditions do change, and the real skills of a system traders, in my opinions, are to understand when to change a system or when to tweak it, when to adapt it, or when to throw it into the waste paper and develop a brand new one. And another skill is to choose the right markets.
Right. Okay. So we'll discuss the competition for a little bit, and then we'll move on to your current trading. So if you can give us a bit of an indication on what instruments you were trading in the competition and the types or the styles of strategies that you were using there.
Well, the competitions I took part to are the futures championships, and then in 2010 it was also Forex. So no stocks. I have not traded any stocks in the championships. I traded mostly futures, and if it comes to futures, let's say the most common and well-known futures out there, the mini S&P future, for example, DAX future, and all the currency futures, commodities, gold, silver, crude oil, and so on. Let's say some bonds as well, bond future, T-bond, everything out there. I was jumping from one market to the other, trying to identify the market which could perform best in the short time available, because 1 year is a short time if we have to perform well. It's awfully long when you have to win it, but it's very short when you have to achieve something.
Right. So what type of strategy styles were you using there?
The championships helped me also to improve my basket of strategies. At the beginning, I was mostly using very strike type of systems, common breakout systems, also intraday, let's say, breaking out at a certain moment of the day and keeping the position to the end of the day. So I was actually looking for trends. All the systems were doing was to identify those days where a trend was more likely to last to the end of the day. So actually, my systems had a pattern to filter out those days which were expected to be choppy. And my patterns, volatility patterns or things like that, based on daily bars, were telling me, yes, you can work today. No, today don't take any position in this market, any trend position in this market. And then simply after a certain amount of time of a trading session, let's say on the DAX futures, about 2 to 3 hours, I was ready to start. After these 2 to 3 hours, I was identifying the levels, which were very simple also in this case, high and low of the day so far, and those were my breakout levels. Entering at those levels, stop order, and keeping the position to the end of the day was actually my bread and butter. All positions were with a stop loss and no take profit, because for that kind of system, a take profit normally decreases performance. Then changing the markets and changing also my skills. I probably was growing in my skills as well. I started developing other kind of systems. And today I am fully diversified also in the approach. No longer simple trend following. I do have them, but I have also other kind of systems, counter trend, swing trading, bias systems, and which are based on statistical parts of the market. And many things like that, intermarket analysis. So I'm trying to mix as many things as possible into my basket of systems, so that if something does not perform well, I have something else which is supposed to take some money into my pockets.
Right. So you mentioned there an increasing of your skills. What did the competition help you to discover about yourself?
The competition is a real world, but the differences to the real world are related to the amount of money you trade. And obviously that's fine because you start with a lower capital as the target is to get the highest percentage possible at the end. But the situation is very similar and everything is stressed to the extreme level. So every condition is stressed. You have to make money. It's no longer a matter of going out and buying some bread for the kids. It's just a matter of you have to make money because you have to win the competition. So you have to make it, and you have to make it within a certain period of time. Competition is 1 year long, so if you don't achieve your goals within those 12 months, you are out. So you are stressed to extreme levels under every point of view, and you have to be very fast in your reactions and decisions. So the competition helped actually in trying to understand the markets and the changing conditions in the markets as fast as possible, and to try, obviously, always to find solutions to the new conditions and to the changing environment I was trading in. So it was something that was pulling me every single day to my maximum performance, because I had to be always there and I had to be watching what was happening and trying to find always the best decision in the shortest time possible. Today, I don't have that kind of stress. I can do these things in a much more relaxed way, but I'm trained now. I know that I have to change. You know that, as Darwin said, it's not the strongest or the smartest, but just those who are ready to change,
Yep.
those who survive. And that is also the truth in the market, in my opinion.
Yeah, so talking about maximum performance there, you achieved some incredible returns in the years that you're in that competition. So perhaps we could have a quick chat about position sizing or money management. So can you give us an indication of the type of position sizing strategies you were using in those competitions to make those type of returns?
Yes, the kamikaze stuff. Well, the truth is, I've also written a book about money management back in 2006. It's the first Italian language book on the matter. To tell the truth, I was here and I was looking for some information about position sizing, and I was not able to find anything in Italian. So I started to study on the internet and on books to try to put some information together. And at the end, I wrote that book, and that book is the book I wished I could find at the beginning. So, and I'm proud of this book because I read many positive reviews out there. The internet is not very kind to traders, the common stuff. Why is he teaching if he's trading? Why this is all a scam and things like that? But on my book, I can read positive reviews, which is very, very, very good to me. I'm not promoting the book; it's not available in English, and I give the money I earn, to charity, so it's not something I make money off of. But in that book, I summarized most of the concepts that I use and that I studied. At the end, there are many methods out there, well-known methods by the name, example, fixed fractional, fixed ratio, volatility percent, and things like that. But common sense is still ruling everywhere. So if we consider the fixed fractional, which at the end is the most common and simplest way to go, so you just at every trade, you risk a fixed percentage of your capital, which might be 1 to 3%. In normal life, you should be risking 1.5, 2, let's say. In a championship, you risk up to 20, and sometimes even more, which is crazy from every point of view in normal trading, also due to the different size of your account, obviously. But if you don't risk that much, you probably don't get to the high levels of performance. One thing, if you understand the mathematics of money management, and for example, if you are able to calculate an optimal F value for the system you trade, then at least you know some upper limits. Above these limits, it makes no more sense to increase the risk. So if, for example, you have an optimal F of 27%, just to say a number, if you go out there and you start risking 30%, you are not more aggressive. You are just more stupid. Because you know that the 27% optimal F is the so-called cliff of death. Yep. Above that, not only you don't achieve a better performance, better ending performance, but performances decrease very quickly because you expose yourself too much. You go above what is mathematical maximum of that system. And don't forget that the system is also based on something in the past and not in the future. And normally, even though it's not a must, but normally systems perform worse in the future than in the past. So actually, knowing something about money management and knowing the limits is useful because you know to which level you can dare and say, okay, here is still reasonable, above here it does not make sense. And that is the optimal F, or even the Kelly number you can calculate. Both in a perfect mathematical world are the same value, which does not happen in trading because obviously trading is a discrete environment. You have 1 or 2 futures. You cannot trade 1.25 futures or things like that. But in any case, it makes sense to know those numbers just to know what is the upper limit. And in the championship, at least in certain phases of a championship, everything was taken to the top of the risk just because you needed to perform. It was also always monitored not to exceed a certain level of risk above which you could be out of the game. And if you, you don't have to look at it because probably you don't have that, but if you see the equity line of my 2008 competition, you would notice that at a certain moment in time, I was down 47 or 48% in drawdown. from the start. And if I had lost some more money further to that, I would probably not have been able to trade any longer because margin requirements would not be fulfilled any longer, and I would not be able to open any positions. So I was to a very limit, and those kind of limits are reached only when you are risking very, very high. I want to stress this so that nobody expects that kind of performance in normal trading. I mean, if I got 672% in 2008, it does not mean I achieve 672% every year on my capital. I would be a liar telling me. I would dream of that, but it's something that I would not even consider, as I know the risk was associated to that. So I can tell you, once after the victory in 2008, I received an email from a guy I did not know, and he asked me, "Dear Mister, if I give you 1 million euro, are you able to transform this into 4 millions after 1 year and into 16 millions after 2 years?" I immediately answered, "Well, I'm not able to do that. And please, if anybody tells you he's able to, go to the first police station and tell them, because he's probably a liar and a scam."
Yeah.
So don't be confused by the performance. That is a competition. That is something which is driven to a maximum level. It is also associated to a lot of luck, because I was lucky. I was lucky. Well, I was also good because I won 4 times, so it's not just a coincidence. But I was lucky. I must tell the truth. Everybody winning a competition is somewhere during that year lucky. I was lucky not to lose when I was 47% down. If I lost 2-3 trades more, I would probably be out of the game, and I would not be here sitting interviewed by you now.
So if we move over to your trading now, obviously you trade with a lot less risk, but how do you manage the risk when you're running so many different strategies?
This is a real nightmare. I've been studying about, and I'm still studying about. I've passed through so many models, and I noticed that most of the models are based on the past behavior of systems. So actually, if you tune too much your model on the system itself, you risk to have something that worked perfectly in the past and probably goes breaking down in the future. So at last, at the end, now I came up to a very simple model where I size the position into every system depending on the market it trades. And I measure the dollar volatility on a daily basis of that market to make my decision. Just to give you an example, DAX future, I trade 1 contract pro system. I somehow mix it also to the number of systems on that market I trade. On DAX, I have plenty of systems, so obviously it's riskier. If I had only 1 system on DAX, I could probably take 2, 3, 4 contracts. That's another matter. But let's say on the number of systems I use, I consider groups of markets based on the dollar move every day, and there I decide how many contracts to use for each of those markets on each system. Associated now are crude oil, silver, gold, DAX, and those are all with 1 contract for me, and also the 30 years bonds. Then I have, for example, 2 contracts on natural gas, copper, and soybeans. I have 3 contracts on Euro FX currency future. No, sorry, 2 on Euro FX and 3 on the British pound future, just to let you have an idea about the sizes. I had another approach in the past, which at the end did not satisfy me completely. The approach was considering that I was mixing systems which were trading in totally different conditions. For example, systems on a longer term trend following, where you could keep a position open for 3 months, it's just an example, and an intraday system. Or just go to the extreme cases, scalping, which I don't have in my systems. It's very difficult to build a scalping system, but let's imagine a scalping system and a trend following system. On the trend following, you have the trade open for 3 months. On scalping, you place 100 trades a day, for example, okay? And if you base your choice on position sizing on the maximum loss of the system, how could you compare these two systems? It's impossible, because the maximum loss of the scalping system is probably very small, while the trend following system has a wide stop loss normally, or at least much larger than the scalping system. So you would risk to trade the scalping system with 10 contracts and the trend following with just with one. And this would obviously lead to a total mix-up, bad mix-up of performance. So I did consider another thing. Let's look at the equity lines from a period's point of view. I looked at that every day, so a daily point of view. But let's imagine a hedge fund publishing a weekly NAV or a monthly NAV. So they have different windows of time when they look at the performance. So let's imagine you publish your results weekly, and every week you tell what your equity looks like. From this point of view, I considered the maximum loss or the maximum change in equity of the two systems. So if, for example, on the trend following system, my equity dropped 3,000 euro as a maximum in 1 week, that was my parameter. On the scalping system, I just looked at the worst weekly period of the scalping system. I could have a period where I lost every day, every single trade out of 100 trades, just to tell you an example, extreme example. So under these conditions, I was placing the two systems into a similar perspective, where I was choosing similar performance over a period of time. Based on that, I could make a decision when I said, okay, for each system, I don't want to lose more than a certain percentage over a certain period of time. For example, I don't want to lose more than 2.5% weekly on each system. And based on those parameters of a maximum weekly loss of the two systems, I could size the two systems in a similar way. This does work, but when you have many systems, sometimes you lose focus, and it's difficult to identify where the problems come from, because believe me, there are always problems. So I went back to a more simplified model, the one I mentioned before, where I chose the daily behavior of markets, because actually the daily moves, the daily volatility, dollar volatility of the market is what I can expect that market to do, and is what I can expect in an open position in that market to happen. That's the way I work today.
Okay, that's interesting. Thanks for explaining that. So, I mean, you say you've got a lot of different strategies there. Where do you get the ideas for all of these strategies?
Oh, I sit here, I watch at the charts, I notice things. Sometimes I got a headache looking at open equity drops in some positions. So I wonder, why does this happen? Why does this happen always after lunch? Yeah. And so I may try to identify some behavior in that specific market in a certain period of time, just after noon, for example. And when I test, when I have some doubts, some ideas, I just sit down, I write a code, and I look at that kind of code to see what a system doing a certain thing would have done in the past. From the results, I get some information, and from that piece of information, I can start building if I see an edge in that. If, for example, you look at the Euro FX, based on the Central European time, you may notice that in the morning, normally it has a bearish behavior, and in the afternoon, it has a bullish behavior. It's not a gospel. It's a behavior which is repetitive all over the years. So based on that, you can try to build something. And this is something you might find in many other markets as well, and you might try to take advantage of that. And sometimes ideas come also from mistakes. I mistake to write a code and I get a very good performance. So I notice that I can do something out of it.
That's the type of mistake you want to make, right?
Yes, those are mistakes I like.
I'd like to ask you some more questions about your testing process, but I might leave it until the listener questions, because there's a few regarding back testing there. So we'll park that one for now and come back to that. Just like to move on to Forex for a little while, because you do Forex trading. And the Forex industry has a lot of scammers out there, selling their over-optimized robots and trying to make a quick buck out of traders. So it'd be good to actually speak to someone legitimate like yourself. So I guess, first of all, what style of strategies have you found work best in the Forex markets?
Also, with Forex, yes, it's true. There are a lot of scams, and there are also a lot of semi-scams. I mean, there are many grid systems out there based on martingale principles. They do work to a certain extent, but they are exposing you to infinite losses theoretically and finite gains, even though the times you win are much more than the times you lose. So not everything is scratch, but it's very dangerous. And then obviously there are all those over-optimized things, robots, which once you put them at work in real time, don't make a cent more. Well, they lose the cents probably in your account. My approach to Forex is very similar to my approach to futures. So my ideas are developed the very same way. I use trend following principles, I use counter trends principles, all similar development process on Forex as well as on futures. And what I do, the same as I do in futures, I study every single market as a separate entity. So I'm not looking for a system working, for example, on Euro, Japanese yen, and on New Zealandese dollar. No, each market is studied on its own. Somebody argues that the robust systems are those which work over every market, every time frame. This is, in my opinion, is bullshit, really. Because, first of all, I don't think the markets are fractal. So I don't think that something that works on a daily basis might work on a 3-minute basis, because the noise in the market changes completely the conditions. Second, this might be true to a certain extent if you base your choices on indicators, but I don't work with indicators mostly. Many people think that trading systems are a clever mix of indicators. I don't think so. I study the behavior of the markets, I study what they do, and then I put this information into the code. I don't study markets based on the indicators, which are a mean value of what the markets do. I might use indicators as filters, but not as a decision maker. And also the Forex pairs have different behaviors. For example, the British pound against Canadian dollar has a typical mean reverting behavior. Also dollar yen sometimes, until it changes, then it's very dangerous. But the euro US dollar, cable, for example, all these markets have a very trend following behavior. So the first thing to do is to identify the pair you want to trade, what kind of main behavior it has, and what kind of reaction it has to a certain input. So if you want to develop a trend following system, you better choose British pound to US dollar, for example. And there you will have an easier life. And if you want to build a mean reverting system, buying at the bottom and selling at the top, you might choose something like euro to New Zealandese dollar, British pound to to Canadian dollar, and there you will certainly find some better edge. So you have to screen your forex pairs and make a decision based on that, depending on what kind of system you want to trade. The best thing, as usual, is to try to diversify also into these, and to be careful about the more or less hidden correlation. Because if, for example, you use trend following stuff and you trade a number of pairs, you have to be careful that all the systems don't trade in the same direction on pairs led by the same base currency, because in that case you would be overexposed to that. If you are long on euro against many pairs, you are simply overexposed, which is dangerous. Don't forget, I mean, all the listeners to this, obviously you all look into your stuff when you have great losers, because you want to understand what happens. Do it also when you have great winners, because probably you were either very lucky, which is good, or you were overexposed. In that case, it didn't hurt you, and you were lucky also in that case, but it might be dangerous the second time you are overexposed if it goes against you. And on Forex, it's very easy to do that, because many pairs have obviously the same base currency. And in that case, you have to be careful about what kind of trigger you use to enter the markets.
Yeah, have you found that there are any particular time frames or periods or time periods that are easier to develop systems on?
Based on my styles of trend following systems, which is my bread and butter, I prefer to work on forex pairs on the 60-minute charts or of 30 minutes. Sometimes I use the 5 minutes, but it doesn't mean the 5 minutes were building my conditions. 5 minutes were simple to fine tune the single moves during the time, but I was still considering larger periods of time to make my decision. So I was, for example, filtering the days on a daily basis, as I mentioned before at the beginning of the interview. And the 5 minutes bar were just to have a very clear picture of what was happening during the day, but not to make my decisions out of it. If I want to make decisions out of single bars, I have to start with a 60-minute chart, minimum 60 or 240. I don't use daily because it's always a bit tricky on Forex. You never know when the day starts. If it's the New York Open, the London Open, the Australian Open. So I prefer to use the 60 or the 240 bars.
Okay. And you've been trading the Forex markets for quite a few years. So what have you noticed? How's the markets changed over the years?
I noticed it became worse and worse. Euro US dollar was a big money maker in the past, and it has become more and more difficult to make money based on the same concepts. It had a comeback lately after the big fall of the last months, but it has been very choppy for many months, years, I might say, and all the models working in the past went broken. They did not necessarily lose money, but were not making money. So it was just a break-even stuff in the luckier cases. So I noticed that it was becoming more and more difficult. And I noticed that also the volatility in the single markets was decreasing. And this was also increasing the difficulties in finding good trades unless you open very big positions. But if you look at the average daily move in pips for the markets, you will notice that throughout the years it changed. This is also due to the number of players, which was increasing every year. So obviously, the bigger the number of players, the more difficult it is to move the market in a certain direction. It goes much slower. In any case, it's becoming harder and harder to find good stuff also on this market. And I prefer the futures market, to tell the truth, today, just because it offers a higher diversification possibility. Because it's true that we have many pairs, but as I was mentioning before, many are referring to a same leading currency, while on the futures you can obviously go through totally different environments, energy, metals, softs, and so on, what is not possible on Forex. So a market with increasing difficulties to make money out based on the same models used in the past. This is what I noticed.
Right, okay. And one final question on Forex. What advice would you give someone who's looking to get started in that market?
Well, first of all, to choose a good broker and not to choose the broker offering the best deal in terms of spread, pips, or whatever it is, but to look for a trusted broker, because we know that Forex is open to scams also on that side, not just people selling services, but also people taking your money. And so you have to be very careful about that. And then to see the leverage possibility that Forex offers as a tool, but not as the tool. Because if you want to do Forex just because you are undercapitalized, I suggest you better go and spend the money at the Luna Park, where you will probably get some more engagement and amusement. Really, people just look at the reclam they find on the internet, promotion and so on. I made $3,000 just with $5. Yes, it might happen, of course, but consider if the opposite happens. So use the leverage, use it, but use it for your strength. If you are undercapitalized, you can do Forex because you can go and open mini lots, micro lots. So that is an advantage. But if you go because you want to trade hard with a small amount of money, then you probably get broken and you would forget about trading very soon.
Okay, excellent. And I assume all your Forex strategies are fully automated?
Yes, all my strategies are fully automated. I'm running everything on a cloud server, which I control, I check from time to time to see if everything is fine, but everything is running in a totally automated way. I have so many strategies that if I had to place trades manually, I would get crazy. I do also trade discretionary sometimes, and I study the markets on a discretionary base because this helps me to be aware of what is going on in the markets. And in that case, I place trades manually, but these kind of trades are obviously much rare as when the strategy I run automatically. So maybe I may place 3-4 trades a month instead of the 3-4 trades a day I do on the strategies.
And what software platform do you use to do that automated trading?
Today I use multi-charts. I'm not promoting that. I'm just telling the truth. I used Ninja in the past, Ninja Trader. I passed to multi-chart. For a very simple reason. I don't say one is better than the other. I just say that in multi-charts I can program using easy language, which is easy, being easy language. As I'm not a programmer, it's much faster for me to develop a new idea there rather than to do it on Ninja where you have to program in C#. So if you are a programmer, a skilled programmer, you can use multi-charts or Ninja regardless of other issues because both are very good platforms in my opinion. But if your skills in programming are not at the top, you probably better go to something which is very easy to develop. And in this case, I chose multi-charts.
Okay, all right, thanks for that. So I'd like to move on now to some listener questions. We've got quite a few here, so we'll get started. The first one is from Russ. His question is, I've heard that trading strategies should be simple. It would help me to know how many lines of code are in one of your typical systems.
Yes, I subscribe with it. They have to be simple, but also in this case, the lines of code might vary. They might be 20 to 40, 60, depending on the strategy. Not 3,000 lines, of course. I say from 20 to 50, let's say, in average, depending on the complexity of a strategy. But really, I don't have anything like rocket science in my code. So I keep it simple and. These codes, as I mentioned before, are written in easy language, so you also can make your calculation to estimate how long they would be if you use a different language.
Yeah, I suppose lines of code isn't a good indication because it obviously depends on the programming language.
But just imagine, easy language is an array-based language, so it already knows everything about the time frame structure. But if you have to program that logic into a system, if you work on a tick base, for example, you have to program the bars concept. Obviously, it becomes much longer because you have to code something to let the system understand what you do. So I have those 20 to 50 lines just because my software already knows a lot of things depending on the charts, which not necessarily can be true for somebody who wants to build a complete brand new black box in trading. So that is different.
Okay. All right, thank you. The next question is from Craig, and his question is regarding the degrees of freedom in a trading system. He would like to know how many degrees of freedom do you use for robustness? Do you only trade robust systems with X degrees of freedom and no more in your personal trading? And is it possible to slip in an unoptimized filter, say the market above the 200-day moving average, that then won't count as a degree of freedom, or is that just trying to cheat statistics?
Ooh. Well, I never counted my degrees of freedom because it would create me some headache probably. But I try to be careful. I'm not led by numbers. I'm leading the development more by common sense. And when I put a constraint into my system, so for example, trade only if yesterday's daily bar had a body smaller than 50% of the total range, just for example, this is a constraint I put into the system, but it makes sense. So if what I am telling it makes sense, then I accept it. If I don't like those automated pattern recognition software where you get some combinations and those tell you this is the system to use, because actually I think that is just over neural network stuff or things like that, because that's just trying to data mine the past. So I try to put conditions which make sense to me, and I try to keep that possibly to a minimum extent, minimum level, just to avoid things like that you said, to optimize. The point is that every kind of filter is a filter. But obviously, if you run an optimization and you find out that, and this happens, for example, on the DAX future, that the 190 days moving average is better than the 200 moving average, what do you do? That might be my question. My answer is it doesn't make any difference, in my opinion. You can use both because this is just a very basic filter. But it's still a constraint, obviously. 200 moving average is a very generic filter, but it's still a constraint. So you are not removing anything, but you are adding a constraint in any case. But it's something that you know it makes sense because you know it's used from the players out there. So it's not a trick you are using or a workaround. It's something that makes sense, and this is the important stuff. Obviously, if you optimize and you choose the 201 instead of the 200, then it's a silly decision. And I never take the best possible net profit result of an optimization. I try to find zones of stability in the parameter. So if I run an optimization and I find that there is a stability of performance between, for example, 3 and 7, I might take something around 5. And if there is a top at 10, I would never take that. If around 10, I don't find the same level of good results. So it's just a matter of trying to understand what you are developing and making the decision if you are ready to accept it or not. And obviously trying not to cheat yourself in this decision. It's easy to cheat, and believe me, we try to create illusions to ourselves. So we have to be very, very, very careful about what decisions we make. We have to write them down and then review them sometime later, because sometimes we're tricky with ourselves because we want to believe that we are going to have the best system possible. We have to be with clear and open minds to what we do, and we have to make the decisions with a very critical mindset where we say, yes, I accept this because I know I'm not playing a trick to myself.
Yeah, sure. So that leads nicely into a question from Thomas. He wants to know if you re-optimize your systems from time to time, and if so, when?
Well, normally this happens, it does happen, but it happens when I have some problems with the system. I look into that and I try to understand if something happened and something changed. It's not a question of re-optimizing. I'm not changing or tweaking the parameters just to get a better past result, because I believe that as it could have failed in the past, it can fail in the future, obviously. So I try to understand what happened to lead to a poor performance of a system, and I try to see if I can avoid that. There are also cases that it could happen maybe after 6 months, for example, because I'm not worried about after 3 days loss. I always wait for longer periods of time where I see that the system is really not performing the way I expected. Then I might also consider re-optimize or changing a little bit the parameters only if with the new parameters I see that the behavior is spread through all the history I have at my disposal. I'm not looking for something that just canceled the losses of the last period. I'm looking for something that showed to be stable throughout the period. It might lead to poorer results in the past where I first optimized the system, but I try to choose something that shows to be as stable as possible, hoping it's stable also in the future.
And if you've got a system that takes long and short positions, do you optimize those separately?
Oh, normally I do, yes. As I mentioned in the earlier part of the interview, I use some daily patterns, filters, and obviously these daily patterns have sometimes to be mirrored from long to short. If, for example, I decide to enter long only if the close of yesterday was smaller than the close of the day before, the short entry decision would be the opposite. So the close has to be greater than the close of the day before. Under this point of view, the conditions have to be obviously different, and I run the optimizations separately to study the market. I stress this. I run optimizations to study the market, not to find the best way to trade it. I try to study and to see how it reacts to certain conditions, and then I make the decision what to use. Sometimes I find out that, for example, for long trades, you have good results with a number of filters, while with short trades, you have good results only with a couple of them. And this is a very dangerous situation where you have to consider that all the positive results on the long side might just depend on how the market moved in the last periods. And those are very critical situations where you might consider either to take only long trades, which is bad in my opinion as a decision, unless you're trading a specific market such as mini S&P or bonds, where the situation is a bit different from also a structural point of view. Or you might decide to put into the system also some conditions which lost money in the past. But you expect that if the market changes from bearish to bullish or the opposite, those conditions you chose, which lost money in the past, might make money in the future because the market changes to the opposite. So that is the most delicate. But I study long and short separately to understand, to try to understand what the market is telling me.
Okay, great. And one final optimization question from Thomas. He'd like to know, do you use trading day of the week, of the month, or of the year, or would you say that is too optimized?
Oh, I use that, but also only to filter out days. If I find that systematically every single Tuesday I lose money, really I say, okay, I don't want to trade on Tuesday. But the point is, I have a look at how it behaved throughout the years, and only if I see that really on a certain day that system does not perform well in that market, I decide to keep that day out. If it's just a slightly worse performance, I don't take it out because I believe that it might be just a coincidence. I don't use day of week, day of month, or things like that as a decision maker. So I don't, for example, decide to trade on Tuesday because Tuesday has shown up to be good. This is a different way to look at the things. So I use that only as filters, not to trade when it did not show to perform well.
Okay, great. That's some good tips there. Thank you. Next question is from Ola. Trend following is typically associated with higher drawdowns. And unless you've actually experienced, for example, a 30% drawdown, how would you go about finding where your limit is? I ask this because when you design and backtest a trading system, you can adjust the parameters to fit your worst acceptable drawdown. Is there some way to test yourself that you can suggest?
Oh, that is a very difficult question because the trend following systems, I mean, in this case, the medium long-term trend following, because I think the reader is referring to this, open a world and you really can't answer. You have to be prepared for everything. And in this case, I believe that only a real deep diversification in markets helps, not in some position size. Okay, you have to trade small, this is obvious, but you cannot really avoid with complicated filters to fall into that drawdown, in my opinion. So you have to be prepared to live the drawdown you experienced on backtesting and even a worse one, considering, for example, twice that drawdown as the real limit. And when you decide if you can withstand it or not, if you can't, you simply cut your size by 2, for example, unless in that case you see that also the returns are no longer in line with what you expect. The problem with trend following is that it takes a long time to make money, and which is fine actually, because at the end of the story you have made that money. But it takes also a long time to pass through the bad phases, and it takes a long time to understand if something is going wrong. So these are the points, the reason why I don't like it very much, because you sit in a position and you can't do anything because the decision is taken for months. You don't have anything to do to react to that. But obviously, the only suggestion I can have is to keep those systems as simply as possible, so that you know at least that the backtesting shows something that would not be probably completely upset in the past, in the future. Sorry.
And do you have any advice for traders on how to handle drawdowns?
Not to look at them. If they make the decision, if they made the decision at the beginning, they have to have a plan when they exit the trades, and they need to know worst case scenario where they have to quit. So they have to just to mark it and say, okay, I have to be advised when this happens, somehow, alarms or whatever. But to sit and starve at look at the monitor the whole day makes only a bad feeling. So the only thing to do is you have made your decisions, fine. Place the trades, put your stops, and forget about it.
Okay, thank you. Next question is from Marcus. I have noticed that you have made your success with futures of varying types. Have you tried doing something similar with stocks? And if so, what was your experience?
I used to trade stocks on the Italian market back in 2007 with very similar approach, daily patterns and pattern trading, swing trading stuff. I stopped doing that simply because stocks are necessarily correlated. I mean, obviously you can work on different sectors, but at the end of the story, you are still overexposed in a certain direction because when markets fall, all stocks fall as well. And when markets rise very much, I mean, on those days where something big happens, all the stocks move also in the same direction. So you are overexposed in one direction or the other. And working on index futures helped me much more than working on stocks because I have one item which groups the stocks, in my opinion, the index future, and then I can diversify going on other sectors, on real other sectors such as energy with crude oil and so on, and metals and other things like that. So I stopped trading stocks because it required too much effort. Also considering the number of stocks we have to trade to monitor, and I kept the index part just as an index future.
Okay, and the second question from Marcus. Do you feel it is easier to make larger profits through systems that are intraday than those that are required for you to hold a position overnight because of overnight risk?
It's difficult to monitor this. Probably you could make more money trading intraday because you have a higher number of trades. Obviously, the first one to be happy is your broker, but the second part is that if you have a good system, you make more money because any kind of position sizing algorithm takes action on the next trade. So the higher the number of trades, if obviously you are winning, the more effective the position sizing is and the faster the growth. Imagine just if you have just one trade, you open today and you close in 10 years from now, no position sizing is taken on that. You have just that position open. So in that case, money management would be ineffective. But if you have 10 trades every day, you place obviously trades in the money management power in every single trade you place. But the higher the number of trades, the higher the number also of problems you have, starting from the fact that every single trade would probably be in average, probably for sure, be smaller than the overnight trades, and the costs related to the trade have a higher impact. So you really need to have a very good strategy to trade with it. The overnight risk, it's not that bad in my opinion, because first of all, there are markets which are more or less 24 hours today, 23 hours at a quarter, if you look at some commodities and so on. If you look at index futures, okay, there is a wide break, apart from the mini S&P, but on Australian future or on DAX future, you have a session closed in the night, and that might expose you to a risk. But if you look at the statistics, you might see that indexes grow during the night. So theoretically, if you bought every evening and you close the position every morning after, you would have made money. So probably you would be happier to keep a long position overnight rather than a short position overnight. These are all things to be considered with statistics on your side. I believe that also in this case, the best way to make money, or at least not to lose, is to diversify also on duration of the trades, and that is duration of length of positions on the single systems you use.
Okay, that's interesting. The next question is from John. John's a Forex trader. He asks how to find relative strength with Forex. So equities have a lot of relative strength measures, various indices, market breadth, etc. But in currencies, the DXY seems limited. I've been looking at various rates of change for each pair against gold as it's relatively independent from reserve banks. Also, relative distance from long-term averages. I've tried to make my own world index, looking at COT data, etc. But I guess without a mentor, I lack confidence in these things. Would be great to hear a professional opinion.
Oh, well, the measure against gold might be a solution, of course, but only if you really want to automate that. I mean, if you want to have a number which is a decision maker in your systems. If not, you normally know if euro is strong, if dollar is strong, if yen is strong, you know that. So, because you know what is happening, what is going on in the world. It's not something that is exhausted in one single day. It normally goes on for weeks. So you know that there are periods where some currencies are strong and some currencies are weak, and therefore you know the relative strength between the two. Apart from that, yes, you could measure them against something which is, let's say, pretty neutral as gold, provided you have a good information out of that in your data provider, because gold against dollar is well known everywhere. Against other currencies, it's not always easy to find it.
One final question from Martin. Martin would like to know the best mechanism for measuring system performance when backtesting. So what measures do you look at when you're backtesting systems?
Oh, obviously I look at the net profit, this is clear, but I also look at the average trade just to understand how robust the trades are, and that is a decision maker on if a system is good or bad from the beginning. If I have a system on silver future, which with an average trade of $100, I would not consider trading it. It's too small. But $100 on cacao is good. So it depends also on the market. So I look at the shape of the equity line, and what I aim is to have something where I have stability throughout the years, possibly throughout different periods of scenarios of that specific market. So it's not just something I look for a history of 20 years. I look for something where possibly in the history I know there have been different phases, uptrend, lateral, heavy drops, things like that. And I see how my system reacted in that case. If my equity is smooth enough, nice enough to be considered, I keep the system into my basket.
Okay, great. And a question here from Marie. If I wanted to learn to trade, how could I learn from you?
Not doing what I do. Just kidding. Well, I'm not really that great educator because I run seminars and workshops very seldom, and they are normally to a skilled audience already. I'm considering some video course, but this is something that may come in the future. I'm too lazy, and actually I have too many things to do now to build that. But to learn from me, normally I try to discourage people from trading because I know it's dangerous and it's not similar to what they expect. But if you are already a skilled trader and you want to refine your skills, you might consider attending, for example, my master course, which I run twice today and in the last 3 years. So it's not something that happens very often. But to learn from the beginning, from the start, that is very difficult. Sometimes I lecture around the world, but this is more something where I just, like this interview, where I say some general comments about trading and so on. But a real path of education with me in this moment is not available because I'm first of all a trader and not an educator, even if I love educating really, but it takes too much to build. Well, stay tuned on the website. Maybe if something happens, it comes out. But I would suggest you also to look around for other educators. For example, I mentioned Kevin Davey because I know him and I know he's a great trader and a great educator. So I would say he is certainly a man who can teach something about trading.
Yeah, we've had him on the show before. He's fantastic. And Mike also wanted to know if you're going to have another seminar soon.
As I mentioned before, I don't know if that would be soon. I don't know where he wants the seminar to take place. In Australia, I never considered it. Well, I would like to come over, but I need at least about 10 people attending the workshop to cover all the expenses related to a transfer to Australia, to time and money spent to there. I have no plans so far, really. I was in discussion with some friends to do something as a joint, maybe later on this year, at the end of the year or so, but there are no plans at all. When something happens, I publish it on website and on Facebook and so on, but so far I have no real plans. If somebody from the listeners is interested in the master workshop, they can go to visit my website. I mention it here if I'm allowed to do, the
Yeah, sure.
www.oneyeartarget.com. There is a section where they can vote for preferred location of the workshop, and if there is a number of requests, I might consider doing that, but I'm not planning it now from zero. Read carefully, please, the page about the workshop before putting your preference, because many people put the preference and then when the workshop is organized, they disappear.
Is that because the workshop is about the process of generating your own systems rather than just being spoon-fed?
Yes, first of all, it's also pretty expensive from the point of view of the attendance, in my opinion. It's not expensive, in my opinion, from the point of view of what you get, obviously. But some people just want to go ahead way with a system. In that case, it's not the right place. Yes, they would take some systems away, but it's not something the workshop is created for. The workshop is some thing where I try to pass over to the attendants my way of developing and my way to look at the market so that they can do that on themselves. And if somebody just wants a good system to trade, that well, then look for somewhere else because it's not what I'm selling here.
Yeah, okay. All right, well, if we can just wrap up with a few quick closing questions. What's the biggest lesson you've learned through trading?
The biggest lesson, is that I still don't know how long it can last. Trading is incredible. I obviously lost money more from special events, the crack of PFG Best, for example, and the Swiss franc affair, where some important part of my money was taken away. But there are no certainty in this market. Everything is unsure. That's why I also suggest to think about something else, because you never know what happens tomorrow.
Yeah. What do you think is the most important ingredient to becoming a successful trader?
You need to be, you need not to be greedy. You don't have to do it for money. You have to do it for passion. If you do it for money, there are other ways to make money.
That's good advice.
But if you do it for passion because you love it, then you are on the right path.
That's excellent. Do you have a favorite trading book?
Specifically, no, I might mention, for example, the short, long-term secret for short-term trading of Larry Williams,
Yep.
and all the books, which are free, I think, from Thomas Stritzman. Obviously, Brent Penfold wrote a book where I mentioned as well, which is a very good book. And all the works of Brent Penfold are good, in my opinion, generally, and also of Daryl Guppy. Daryl Guppy is, I think, you know him in Australia very well, and all his books, all his publications are good, in my opinion. But there is no single book which I wouldn't like to mention because there is to learn everywhere, in my opinion.
Yeah. And you know a good money management book if you can read Italian.
Yes, of course. It has been translated into Chinese, by the way, but still not published. It's still waiting to be published. Even though I don't know how many listeners here speak Chinese. But of course, there are many books of Ralph Vince, for example, and also the Trading Game of Ryan Jones is a very good book, and all the works of Kevin Sharp are very good on position sizing. So it's not necessary to purchase my book to learn something about them, actually.
All right. And you've already mentioned your website, oneyeartarget.com. Is there any other way for listeners to get in touch with you?
On the website, they have the possibility to write to me. I have also a Facebook page related to that, but you access to that from the website. So if they want to go there, they can then drop emails or messages through the contact form, or simply write to andrea.unger@oneyeartarget.com.
Okay, great. So is there anything else that you'd like to mention before we wrap up today?
Oh, well, I thank you again for the time you dedicated to me. I just would like to recommend that all people having heard that the best traders in the world at the beginning of their career lost a lot of money. That might be true, but they should not forget that there are also many people who lost a lot of money and then lost all the money later on. So to lose money is not a meaning of becoming rich later.
That's interesting. Thanks for that bit of advice. And yes, thanks so much for your time today, Andrea. It's been really insightful talking to you and an honor to speak with you. So thanks again for coming on the show today. We appreciate it.
Thanks, Andrew. Thanks to all the listeners.
Okay.
And speak to you soon, maybe.
Right. Cheers. Bye-bye.
Cheers.
Lots of great trading advice from Andrea there. There are a number of tips he gave to creating strategies that are robust. Here are some of my favorites. Study the behavior of markets, the underlying price action. Don't study the markets based on indicators. In fact, he said, I might use indicators as filters, but not as a decision maker. A little bit further on strategy, he said, I only use strategy conditions that make sense. I'll keep my code simple. And on the topic of optimization, he said, I run optimizations to study market behavior, not to find the best values. So if an optimization indicates specific values are better, say, for example, shorter values over longer values, don't just take that at face value. What is that actually telling you about the underlying market behavior? What can you learn from that observation? So if you want to get more information about this episode, head over to the show notes, bettersystemtrader.com/16. We've got links to additional content if you'd like to know more about Andrea and his work. Also, a big thank you to all the listeners who submitted questions for Andrea this week. If you'd like to submit a question for future guests, make sure you're on the Better System Trader mailing list, and I'll send you an email when the next opportunity arises. In this week's episode, Andrea recommended fellow World Cup trading champion Kevin Davey as a great resource for creating trading strategies, and Kevin was also a guest on episode 5 of the podcast. Kevin has kindly offered to hold a special online workshop in August for the Australian time zone so that all listeners in Australia, New Zealand and countries across Asia can attend the workshop he usually runs for the USA only. This will likely be his only Australian time zone workshop this year. He can only take a handful of people, plus he's offering 3 months additional support and a special discount for Better System Trader listeners, so it'll sell out fast. Check the show notes at bettersystemtrader.com/16 for more details. Oh, don't worry if you live in a time zone where this workshop doesn't work for you. He has an exclusive offer for all Better System Trader listeners. So once again, head to the show notes, bettersystemtrader.com/16 to get more details. We have some great guests coming up in the following weeks, including Jerry Parker, the most successful trader from the Total Trading Program, plus some others you're sure to enjoy. So look out for those and other huge episodes in the following weeks. Anyway, that's it for this episode. I hope you enjoyed the chat with Andrea Unger this week. Thanks for listening to Better System Trader. Catch you next week.
Thanks for listening to the Better System Trader podcast. The next step is to head over to bettersystemtrader.com for more expert tips, practical advice, and exclusive content. Catch us next time for even more great ways to improve your trading here on Better System Trader.